Rachel, thank you. Today on Growing Idaho, mortgage rates. Yikes. A few weeks ago, we told you they certainly would not go down because the Federal Reserve was keeping its key interest rate where it was to try to slow down inflation. The latest numbers from a couple weeks ago show inflation not slowing down at all, but actually heading in the wrong direction, which means rates are also not dropping, but instead spiking.
The Fed cannot move to lower interest rates when prices are still showing signs that they could be trending higher.
So the Fed will not cut that key rate, and it doesn't look like a cut is coming really anytime soon. That rate influences mortgage rates. So how are those looking with this news? Yikes again. According to Freddie Mac, the average 30-year fixed rate is up well over 7%, 7.17. They haven't been this high since November. Some folks thought then we might not see rates that high in a long time. Instead, here we are just a few months later. What is all this doing to growth and the local real estate market? Yikes, one more time. Still a cool, in terms of cold, market. According to the Intermountain MLS, the number of homes sold last month down 14% in Ada County, down 17% in Canyon County when you compare it to March of last year. That's all while the median price is up 14% in Ada, 5% in Canyon. So home prices keep going up. And when you pair that with rising mortgage rates, buying a home is just unaffordable for far too many people, which is why we see that drop in sales. So what can you do, though, if you're looking to buy? Well, we need to remember that that is the average rate over 7%. So you can actually do some things to get a better mortgage rate and a lower rate than that 7%. Business Insider says first, the better your credit score, the better your rate. So pay your bills on time, obviously, which will help that credit score. Also, your debt to income ratio is a big factor in what kind of rate you get. So if there's any way you can reduce some of your debt, do that. The more you're able to save to make a down payment, the lower that rate can be as well. Also, there are different types of mortgages that will get you a lower rate. VA loans, for instance, can have a rate half a percentage point lower than the normal. And finally, the length of your loan term affects the rate. You're going to get a better rate on a 15-year loan rather than a 30. So the average rate for a 15-year loan sitting at about 6.44% right now. But with paying less on the interest, you're going to be paying more on the principal. So you end up paying more overall monthly, but less in the long run. Again, unaffordable for a lot of folks. Rachel has a final check here for